Hey everyone, welcome back to the channel, your number one source for income-oriented investing. Time to go over the covered call ETF landscape on the Canadian stock market. The US episode will follow shortly. So first of all, like we normally do, let's check out what the markets have done in the past month, and boy has it been a rocket ship. They're on fire. Everything is going up, but that's because the dollar is going down, right? We know this. So let's check out the TSX Composite Index, right? The overall Canadian stock market. By the way, I'm filming this on a pretty crappy day so far. The day's not over on October the 9th. But past month, almost up 4% here, which is pretty crazy just for 1 month. Obviously, gold, which is, gold producers make a pretty significant part of the Canadian stock market, is helping as well as the financials as well. The Canadian banks and financials have been really, really on fire lately. S&P 500 up 3.21% in the past month, also doing extremely well, right? Technology leading the way as usual. And we clearly see that in the NASDAQ, which is at 25,000, NASDAQ 100. Pretty crazy, up almost 5% in 1 month. Absolutely insane, guys. Not as insane as gold. Gold is on a tear, right? You have foreign governments that are buying gold like crazy because the confidence and faith in the dollar and the T-bills is going down. That's, it's a supply and demand asset. And of course, Bitcoin as well, which is kind of like the digital gold is up. So markets, everything's at all-time high or near all-time high, guys. The markets are absolutely on fire. Yeah, but I mean, I'm not scared. I mean, whenever the markets are at all-time highs, the crash predictions all start to come about. This is normal, seen it before. I'm just going to stick to the plan, buy as much as I can every single month because I'm a long-term investor. So let's go over the landscape now. Before we do that, I'd like to thank the sponsor of this monthly series, a very good friend of the channel, Harvest ETFs. Big news coming out of them. I know I did a video on this recently, but they have recently launched HHIS.U. So on the Canadian stock market, there's not much .U, really good .U versions of stuff. There is HYLD.U, of course, but now we have a more higher yielding .U version. So in case you have USD currency in your cash account, your TFSA account, and you want to generate USD currency, well, now we have HHIS.U, where you won't have to worry about that 15% withholding tax compared to holding things like Yield Max, for example, in your TFSA and cash account. So HHIS.U is out. By the way, HHIS is about to hit $1 billion. Pretty crazy. So also some other significant news is they announced that they're taking off the 15 stock guardrail off of HHIS, and they're going to be adding the 4 new ones by the end of October or earlier. Circle, Reddit, Robinhood, Sophie or SoFi. I don't know how to pronounce that one. Oh yeah, and here's HHIS.U, by the way. And HHIS.U is in USD, and the distribution is slightly lower than HHIS, but this is to have approximately the same current yield as HHIS, right? Remember, HHIS started at $12, now it's at 13 something. So that's why the HHIS.U distribution rate is a little bit lower, but the yield, they're trying to match the exact yield of HHIS. So in case you have that question. But yeah, I mean, Circle, Reddit, Robinhood, SoFi, they're going to be added in HHIS as well. And of course, HHIS.U. And these are very, very high yield, violently volatile stocks, everyone. So this is going to definitely increase the income of HHIS. Will HHIS increase the distribution? I can't speak. Harvest won't even tell me. They're not allowed to, but I have a strong suspicion they probably will. That's just my opinion. So stay tuned for that. I'm very, very excited about it because even 1 or 2 cents more a month could mean hundreds of dollars more a month for me personally, and I'm sure for you guys watching as well, depending on how much HHIS you have. So again, thanks to Harvest for sponsoring this monthly series. Let's move on to for the high yield covered call landscape. And as usual, we're going to focus on what I feel is the best version or format with a little bit of leverage, right? We know covered calls tends to dampen the total returns over time, but adding that little bit of leverage, which leverage costs are very, very cheap, and they just got cheaper again in Canada, makes sense. So let's go over the great they're grade 18 now. Let's go through them one by one, everyone. Let me just close off some of these tabs here. So we expand everything. So let's continue with the harvest one. So besides HHIS, and don't forget, they also have the Canadian ones. I almost forgot. They have a Canadian series as well, right? HHIC, for the Canadian version, or Canadian stocks, 10 Canadian stocks. If you just click here, you'll see a separate page, and I have to give it to Harvest. They have some of the best websites, best graphics. You see here the 10 companies here. All of them have 25% leverage, and of course the all-in-one is HHIC with a 16 cent a month distribution rate. They also have HDIV, a little bit more classic, which is a combination of a bunch of their Harvest classic covered call ETFs, bunch of sectors, a lot of sector specific stuff, so you could check it out here. If you absolutely want a 60-40, they have HBIE, also leverage, but 60-40, also covered call. No news in terms of these two, in terms of distribution increases or decreases. Harvest ETFs, very, very reliable, consistent distributions. Moving on to Hamilton ETFs, you got a bunch of them now, which I feel are great all-in-ones to buy and hold forever that could make up core positions of your portfolio. And by the way, all of these I feel could be core foundational positions of your portfolio because they're all diversified, they're all income oriented, they all have great strategies. In my personal opinion, they all have a little bit of leverage. So HYLD, big news on HYLD and HDIV, did a video on it, right? First of all, they took out the bonds, which I was so happy to see that. They also added Q-Day and S-Day in HYLD. Makes sense because those are Q-Day and S-Day are their Daymax US focused 0 DTE covered call ETFs, and they added C-Day and a little bit of Q-Day right here to HDIV, which is definitely more Canadian focused. And look at this, guys. HDIV is, well, I'm sure it's $1 billion now, or it's going to be very, very soon. HDIV and HYLD have both passed, we could say, $1 billion in AUM. So congratulations to Hamilton ETF. So I feel HYLD and HDIV are really the great no-brainer all-in-ones because they have the more higher yielding, torquey, and more exotic C-Day, S-Day, and Q-Day. But hey, if you like Canadian dividend stocks, this is like Canadian quality, boring, aristocrat dividend stocks meets covered calls. They're doing 0 DTE cover calls on the S&P 500 for C-Day and S-Day, but the primary holdings are Canadian quality dividend stocks and US quality dividend stocks for S-Day. So a little bit more defensive. So they're still diversified as well. Great core positions. Q-Day is a little bit more technology or purely technology focused. So this is actually going to do the 0 DTE on the NASDAQ, but they're going to hold XLK, whereas S-Day and C-Day hold the Hamilton Dividend Champion ETFs. And by the way, they're only doing covered calls on 20% of the portfolio for C-Day, S-Day, and Q-Day. In case you didn't know, I have a whole Q&A with Nick Picard. These are fantastic ETFs to consider as well for core positions. Q-Day is a little bit, is it diversified? It does have NASDAQ. I'm going to add it to the list because I think it's so good. I own it personally, separately myself. But I would say this is technology focused here. Moving on to Global X, the kings of the indexes, right? USCL, QQCL, you guys know them, right? My two favorite, because my two favorite indexes are the S&P and the NASDAQ. Even the S&P I find quite boring now. I think I like the NASDAQ more because it's a little bit more tech focused, but no news here. Very consistent distributions, approximately, because they've been going up. Everything's been going up. The yields have been going down a little bit because, the higher the price goes and the distribution doesn't change, the yield is going to be a little bit lower. So you have about 12.5 for USCL, 13.88 right now for QQCL. The whole market's down, but the Nasdaq's doing well. I mean, tech stocks are just on fire, guys. Pretty crazy. And if you absolutely want the whole world, if you like an XEQT, ZEQT style, but you want it in a covered call form with 25% leverage, boom, you have EQCL. And by the way, Global X has launched a silver covered call ETF. I'm going to have a video on that coming up soon. And another question I forgot to address here, you probably have, is are distribution increases coming for HYLD and HDIV? Because now that they added some S-Day, some Q-Day, and C-Day for HDIV, My prediction is that yes, I think personally, and this is, Hamilton can't even tell me if they wanted to, but I feel like there's going to be some distribution increases for HYLD and HDIV. I really hope HYLD is going to at least go to 15 cents, but we know that Hamilton ETFs, they're very, very conservative. They always keep 1% behind. HDIV, not sure what that's going to go to, but maybe 18 cents because the yield is, I think, under 10 now. I mean, it's pretty crazy. So hopefully they'll increase the yields. Moving on to Brompton, they have two ETFs that I feel are great for your core positioning. BMAX, which does have a little, the yield's not super impressive, but Brompton is not really super high yield. They tend to be more conservative with that. Doesn't mean it's not good quality. Been doing really well as well. What's the distribution rate? They actually increased it again to 12 cents. It's going to be 12 cents now. So this is Brompton's all-in-one. It includes all the Brompton covered call ETFs as well as some fixed income in there like SPLT. My preference, they kind of called it multi-asset. I'd wish this was 100% equity, to be honest with you. I wish they would replace this one with Class A, and I wish they would replace the preferred share with equity. But hey, that's just me. If you guys want something a little bit more conservative, I think BMAX is definitely one to consider. One of the only ones that use it, well, not anymore. We're going to see that in a second. 33% leverage instead of 25. They also have Class A, and I will admit to you, if you're a member, you probably already saw this. My intent, hopefully this video comes out on Saturday, but Friday I did all my buys, my October buys. I officially have started position in Class A. It's just too good to ignore. I mean, an all-in-one split share fund, Class A share, guys. I mean, come on. I'm lazy. I don't want to pick and choose. I had LBS. I swapped it into this one because I don't want to pick and choose my individual Class A shares. This is an actively managed fund. If you guys missed it, make sure to check out the video I just did with Michelle, the queen of split share funds, where we talk about split share funds. We talk about the recent success and split of LBS and SPC. We talk about Class A in detail. And I also have other videos with Chris talking about Class A. But I have officially introduced this in my portfolio. And by the way, if every month you don't feel like waiting for the portfolio unveil video, which is typically at the end of the month, become a member, because whenever I do my buys of the month, which are typically the 8th or 9th, I come out with a members only video where I show you right away what changes I made to my portfolio. And it's only $3 a month, guys. If you don't want to spend that money, of course, you could get the update for free with the regular portfolio update near the end of the month. Moving on now, Evolve has Biggie and Canny. I'm not sure when the Q&A is going to come out. So, sometimes I film so many videos, I just don't know what's going to come out first. But I did do a in-depth Q&A with the CEO of Evolve. I know you guys have been asking me about it, to discuss Biggie and Canny in detail. What is the cover call strategy? Why 10 stocks, etc., etc. Are there more ultra yield products coming, etc., etc. So you have Biggie, which is, I think of it like a concentrated version of HHIS. There's only 10 stocks, basically the Magnificent Seven, Palantir, Coinbase, and Strategy. With 33% leverage, that's what makes them stand apart a little bit. 33% leverage, and distributions paid twice a month. So about 28% yield on this one. And then they have Canny, which is basically competing with, as we'll see in a second, ECHI and HHIC as well, which focuses on 10 Canadian companies. Same exact concept of Biggie, except of 33% leverage, paid twice monthly. The 10 stocks, you have them here, right? You got the 4 banks, Cameco, Shopify, etc. Very high yield, but of course the yield's not going to be high as Biggie, because Canadian stocks don't have that same volatility, right? So again, guys, all of these, all diversified technically, right? All right, maybe not Q Day, but hey, I love Q Day, so good. But all of these are diversified and could fit in your portfolio. ECHI from 9 Point, right? I have another Q&A coming up with 9 Point to discuss the first distributions, distribution sustainability. Are they going to be launching US high shares? So stay tuned for that. But ECHI, what makes this one apart or separate from Canny and HHIC, it has the lowest fee. It actually has 0% fee until March of next year. And the stock selection is not really equal weighted. That's another difference. So the yield is a little bit less than Canny, a little bit more than HHIC, but I mean, all three of them are competing or have very, very similar strategies in stocks. So ECHI, 9 points all in one if you want some Canadian exposure, some high yield. And last but definitely not least, you have Canoe EIT Income Fund, which seems to, technically a closed-end fund, very similar to a split share fund structure. And I guess they're going to just keep their distribution at 10 cents a month, which means you have very, very, very low yield because the stock price has been going up and up and up. But hey, the total returns speak for themselves. This is the biggest closed-end fund, I believe, in Canada by far. Total returns are amazing. And this has North American exposure. So not just Canada, it has some US and actually some international as well. International exposure as well. Purpose has their own suite of yield shares, by the way. So they have Canadian ones, unfortunately, no all-in-one, but they have a bunch of single stock Canadian. All of these are leveraged 25%. They have a US suite, of course. In their US suite, they kind of have an all-in-one called YMAG. This has the Magnificent 7 plus Broadcom, basically. So if you want very, very concentration in Mag 7, this could be a good option as well. This is kind of like their only all-in-one. They also have Bitcoin Yield and Purpose Yield ETF, which I'll discuss a little bit later. But the big news on this is that they're trying to amend, I think it's at the end of October or mid-October, they're having a shareholder meeting to get the approval to add 33% leverage, finally, to BTCY and ETHY. So we'll see what happens with that. But a little bit more on crypto later. I cover it later on. So I know you guys have asked me, can you do like you do in the US and show some total returns? It's kind of hard to show total returns because I want to do it for funds that are easily comparable. So things like ECHI, Canny, and HHIC would be great, but they haven't been out for long. So things like HYLD, USCL, QQCL, I don't have much to compare them to, but I decided I'll do funds that are kind of similar, that are like North America International. So if you do HDIV versus HDIF versus EQCL versus BMAX, I guess we could compare those. And the winner by far is still HDIV for these ones. You could see the results here. These ones, we have, for some of them, we have 3 years of data. EQCL and BMAX, we don't have 3 years yet. We only have 1 year, but you could see that HDIV with that special combination of the best of Canada, the best in US, not everything covered call. There's some growth stuff in there. The fact that it has the gold as well is the top performer out of the 4 here. Moving on to the super boring non-leveraged covered call ETFs. So if for some reason you're not comfortable with the leverage, these are some diversified ones you could consider. I'm going to go through them very quickly, guys. I don't want to spend too much time here. I'm going to be here all day because there's so many of them. But again, these are all diversified. I guess they meet the criteria as good foundational positions in your portfolio. ZWQT, the all-in-one BMO cover call ETF one. Of course, BMO has other ones as well, ZWG, ZWC. They have a bunch of them which are as well or diversified you could check out. And I haven't shown these, but you guys, maybe in case you didn't know, RBC and TD have their own cover call ETFs, but it looks like they just kind of copy what BMO did, where they focused on dividend stocks and just doing a little bit of covered calls on it. So the yields, just like the BMO ones, are not exactly super exciting, but RBC has a Canadian one, RCDC, they have RUDC for their US one. So these focus on US dividend stocks, Canadian dividend stocks, and then they just write a little bit of covered calls, kind of like ZWG, ZWC, etc., etc., etc. Even TD, they have 2 of them. They have one that focuses on US, one that focuses on global. They have another one which is just the US one hedged to the Canadian dollar. So these yields are very, very minuscule. I just figure I let you know about them. In terms of, I think if you absolutely don't want to leverage, my the best seem to be the evolved ones, the ESPX for the S&P 500, ETSX for the TSX 60. Of course, you have JEPI and JEPQ now on the Canadian stock market, which you guys know I'm not super a fan of because you might as well just get the indexes, right? You just might as well, for JEPI, get the S&P, and for JEPQ, get the NASDAQ. And I'll show you the proof is in the pudding in a second. Fidelity has FEPI as well. It's a rinse and repeat, 2% out of the money on the S&P 500. Even Invesco has their own, the guys who manage the Qs have QQCI. And there's also PDIV as well from Purpose, which has remained steady, I believe, with the distributions. Yeah. But looking at total returns, if we just do QQCI, I just wanted to show you that Global X's QQCC is beating QQCI. So, just like on the US, the Invesco NASDAQ cover call is just not performing as good. It's not bad, but, you might as well stick with the Global X one. But of course, my opinion, you go with QQCL. And I just want to show you how JEPI, FEPI are doing versus ESPX.B. You could see that ESPX.B is absolutely destroying JEPI, for example. This is what happens when you try to stock pick in the S&P versus just getting the S&P. It's usually better just to get the S&P. You see how FEPI is doing pretty good as well, but the Evolve one is beating everyone. But of course, if you get the USCC leveraged, you're going to beat everyone as well, right? So USCL is still the king. Just wanted to show you guys that. But in terms of the non-leveraged, you have ESPX.B, which is the non-hedged version, which seems to be the best. And I'm pretty sure that QQCC and QQCL is beating JEPQ as well. All right, moving on to cryptos, to Bitcoin, you have HBIX, of course, from Harvest. These are all levered, basically just Bitcoin with cover calls, or IBIT with cover calls, and 25% leverage. You have HBIX, which pays monthly. You have BCCL, which pays semi-monthly. You also have, obviously, the non-leverage version as well. But Bitcoin and Ether, BTCY, ETHY, you could read it here. They're planning on adding 33% leverage, guys, not 25, 33% leverage finally to these ETFs. We'll see what happens. You have HBTE, which has been absolutely on fire, everyone. I think it more than doubled. It started at $12. Now it's at $26. It's just crazy how well this one's been doing. I wouldn't be surprised if there's a distribution bump as well. This has Bitcoin related companies. So if you want to get into Bitcoin, you don't really feel comfortable with things like Strategy, which by the way is a big position in Biggie and HHIS. Coinbase is in there too. Now Circle is going to be in HHIS. So if you want to touch a little bit of Bitcoin, you can get HHIS or Biggie. If you don't want that Bitcoin directly, HBT is also a good option. That's what I'm trying to get at here, right? If you look at the portfolio, it has Strategy in here and Coinbase in here, but it also has Bitcoin itself in here. But it has a bunch of miners and data center stuff like Iron that's been on fire lately, on crack. Galaxy, Riot, Marathon, Block, Core. So I think this is, my opinion, this is the least risky way to get into Bitcoin related stuff as a cover call income oriented investor. This has cover calls, 25% leverage. It's been on fire. I have quite a sizable position. You guys know that I have HBTE, I have HBIX, and I have MSTE. Split funds, guys, check out the recent Q&A I did with Michelle. They're on fire because most of them in Canada focus on the Canadian financials. You have LBS, you have SBC giving massive bonus shares. You have BK and FTN giving bonus shares. And a lot of them are still trading at discounts. You see that here. There's a weekly report I do every Friday for members telling you about the Brompton and Middlefield split share funds trading at a discount or a premium. Look at ENS. Massive discount, right? You could buy it for $15.57, but it's worth $17.86. Even this one's trading at a discount. So lots of opportunity. And remember, guys, if you're lazy like me, I just opted to go with Class A, which holds ENS, which holds LBS and SBC and GDV and DFN and FTN, all of them, kind of like an all-in-one split share fund solution. if you're lazy like me. You don't want to worry about missed dividends as well. During a bear market, Class A is a fantastic option. In terms of what sectors are undervalued, guys, everything's on fire now, maybe except healthcare. You have HHLE to consider if you want to get some healthcare specifically, but I think even this one recovered a little bit. Everything's on fire, guys. I've personally got back into gold. And when it comes to gold, I think GLCC and GLCL are great options. So GLCC, probably the biggest covered call ETF Global X has. GLCL is recently just came out. It's a leverage version. You guys know that I'll only get it if there's a leverage version. So I opted to get GLCL. I'm adding another $10,000 to this one. They also came out with a silver one. And if we do a comparison, I was just curious. If we do GLCC versus CGXF, remember that one, the CI one, and even Hamilton has one, AMAX. And I even went with HGY or did the comparison with just gold, not gold producers, but physical gold with cover calls. And you see that in terms of performance, if you look at the 1 year GLCC, looks like Global X does it best when it comes to gold producers, guys. CGXF, AMAX, not too far behind. But if you look at the gold producers versus gold with cover calls, you see how big the difference is. So this is why I would always go with the gold producers. It's kind of like what's happening in Bitcoin. HBTE, which has a lot of Bitcoin miners, is outperforming HBIX, right? Is outperforming the Bitcoin itself. So I think it's the same type of market. The same thing is happening. So I'm definitely opted to go with the gold miners instead. It's kind of like leveraged gold, if you will. So that's it for the review of this month, everyone. We're going to do this again next month. Hopefully I didn't forget anything. Let me know your comments or questions. I really appreciate you guys watching, tuning in every month. Remember, the point of this series is to tell you what's going on in the cover call space on the Canadian market, which ETFs to consider for your core positions. We're going to do this every single month going forward. So thanks for watching, everyone. Really appreciate it. Take care. Stay safe. Stay passive. Stay honorable. See you next time.